The S&P 500 snapped a three-day losing streak Wednesday today as investors digested third quarter earnings and insights into when the Fed might taper its asset purchase program. Additionally, today the inflation data has been released. And good news, the stock market is rejoicing. So I'll be going over the inflation data and the surrounding effects in this video. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's begin. So while I share my screen with my articles and data, please be sure to subscribe. 1, 2, 3. If you have not subscribed, please do that. Okay, so the broad index closed 0.3% higher at $4,363.80, fluctuating between gains and losses throughout the session. The Nasdaq Composite ticked up about 0.7%. The Dow Jones was flat at 34,377.81 after trading more than 260 points. The Dow is a little bit sour today. I'll talk about that maybe at the more on the end of this video, but everything else for some reason is up. Stock market sometimes I feel has its own mind. So minutes released Wednesday afternoon from the Federal Open Market Committee's September meeting show the central bank could begin tapering its asset purchase program as soon as mid-November. And investors' early headline today, their thing to rejoice about was September CPI reading, which showed a 5.4% year-over-year in consumer prices that was slightly hotter than the 5.3% expected. So we're doing good, we're on target, but with a little bit of overachievement, which is perfect. Okay, a global investment strategist for Commonwealth Financial Network said some of the transitory components are already moderating, such as airlines, apparels, and used autos. Disruptions due to supply chains not being able to keep up with the spike in demand may take longer but will eventually be fixed. This is Anu Gagar, global investment strategist for Commonwealth Financial Network. However, higher rents and wages could prove to be stickier and eat into corporate margins. So we have to still be cautious, but we are recovering amazing. All right, next stop. The results. So in the Labor Department's Consumer Price Index, core prices excluding food and energy rose up by 4% in September over last year, coming down only slightly from June's 30-year high of 4.5%. And a broader measure of consumer prices, including all categories, rose 5.4% in September compared to last year, coming in at the fastest pace since 2008. So we are recovering amazing. Okay, Wall Street's Alliance Group, Adil Zaman, told Yahoo Finance this, though. We think investors should fasten their seatbelts because this is going to be one rocky earnings session. This will be a make or, in my opinion, this will be a make or break thing. Either we make it or we don't. This is what's going to Wall Street analysts are also looking for third quarter earnings growth of about 27% on a year-over-year basis. Though this would still be the third fastest earnings growth since 2010, it would be a market slowdown from the second quarter's nearly 90% pace. Bank of America's head of U.S. equity and quantitative strategy, Savita Subramanian, wrote a note in this week that this will be a make or break quarter, as I said, with all eyes on margins and supply chains. I wholly agree with her. So as we recover, it's going to be a bit rocky and we should fasten our seatbelts and be cautious. But there's no need to worry. We're nowhere near stagflation. We're good. Stagflation is like a stagnant economy plus inflation combined, and it's investors' worst nightmares. But according to Jim Cramer, it is not happening. I will pull this up if you guys don't believe me. Jim Cramer says stagflation worries are overblown and investors shouldn't panic. I will read a quote from this. It might surprise you how quickly things get better right when most money managers think all that is lost, the Mad Money host said. This implies that when you think all is lost, it's a disaster. it'll come back. Look at GameStop's like condition before the short squeeze. It was practically like just suffering, just being alive as a company. And now look at it. I have a GameStop near my house and it reopened. So don't think it's the end of the world when things are bad. It will get better. It'll just take time. So let's look at the stock market conditions right now. The Nasdaq Composite is up by 105.71 points at $14,571.64. The Dow is down about 0.53 points, 0.0015%. That's not bad. It's practically flat. So that's neither a gain or a loss unless you count 0.53 as a loss. And the INX or S&P 500 is up by 13.15 points or 0.3%. The Russell 2000 is up by 7.7 points to 2,241.97. Then the NYSE Arca Oil Index is up by 2.48 points, totaling to $1,182.31. So, in conclusion, this recovery road is going to be a rocky ride, but we're recovering along very smoothly. Investors, in my opinion, this is all my opinion, not financial advice. Investors, in my opinion, should be cautious and careful, but also remember that we're nowhere near stagflation and there's no need to panic. In my opinion, what I always like to do when it's down, when stock market's down, it's time to go shopping. So thank you guys for watching this video. I hope you enjoyed it. Please be sure to like, comment powder puff down below so I know you're at the end of the video, and subscribe. Thank you so much and see you on the moon. Bye bye.